Being late is ugly and a pain. We're looking at those super guarantee charge consequences. There's administration that needs to be done, cash needs to be paid, potentially plus an applied income amount. However, the real kicker is the business does not get a tax deduction for those super contributions. Hi there, I'm back this week to talk about Payday Super, which is coming in on July 1, 2026. I think some people do know that it's coming, but I also think it's a bit of a sleeper in terms of the detail. I think July is going to be an absolute shambles for a lot of employers. We need to consider firstly, what is Payday Super? And at the moment, employers have to pay super quarterly, and that liability is then due 28 days after the end of the quarter. Post 1 July, we're going to need to make those payments to the super within 7 business days of making the actual payment to the employee. I think employers are going to strike trouble in that month of July because many businesses are still paying quarterly, and that full June 26 quarter is going to be payable by 28 July. However, under the Payday Super, whether you're paying weekly, fortnightly or monthly, you're going to cop that double whammy. The first Payday Super is going to be due early July, quite possibly. From an admin perspective, while they've talked about 7 business days, it's not simply about you pressing the pay button. Our friends at the super funds need to process the super and allocate it to the appropriate member. They treat this still as if there is a check going through. So effectively, you do need to be making that super payment at the same time you process the wages. Being late is ugly and a pain. We're looking at those super guarantee charge consequences. There's administration that needs to be done, cash needs to be paid, potentially plus an applied income amount. However, the real kicker is the business does not get a tax deduction for those super contributions. Now, from my own perspective, what I've actually done as of last year is I am treating it as if Payday Super is happening now. I have moved to make my superannuation payments at the same time that we process the payroll. I'm smoothing out my cash flow now rather than get to July 26 and find myself with that cash flow crunch. What should you consider? Whether or not you move rather than paying quarterly to monthly so that July shift is not quite so problematic, maybe you need to consider looking at something like that. Now, the big question here is how the ATO is going to treat this information, because they do have the information in real time. They have been quite heavy-handed in their application of those super guarantee charges, and I just think that there are going to be a lot of businesses, simply from an administrative perspective, also from a cash flow perspective, that are going to find themselves falling foul of those timeframes. Now, if you're an employer and you're currently paying super quarterly, I would increase the frequency now. Talk to your accountant or bookkeeper, talk to your payroll provider, and map out a tighter payment rhythm moving forward. Next week, I'm going to talk on a macro level about what the ATO is trying to do here. I'm TC, and that's my 2 cents. Now, before you jump, if you got something out of this, like, subscribe, or share. The videos are for information purposes only. I'm just a poor simple bean counter and no substitute for good financial advice. Any commentary or advice is general only. If you would like tailored advice, be it business advice, tax, or accounting advice, please contact me at admin@atomicba.au. If you've got a topic that you'd like me to cover, hit me up in the comments below or email me at tc@tcs2cents.com.au.